here with Brent Rogers of 360 RTO Solutions to answer your questions about financial viability requirements. Thank you very much, Brent, for coming here. Thank you guys for sending in all of your questions.
Most of the questions I received are about how much money they should have, how are they going to demonstrate financial viability, how much capital they should have. Is it really about how much money you have?
Obviously, finances are important. You need sufficient capital to be able to start the RTO that you intend to deliver training with. But to be quite honest with you, the audit reports we've seen that have had sufficient FRVA forecasts, in other words, the numbers all added up and created a sufficient business case, that's not where the financial viability risk assessment fell over. Where it's actually fallen over is where the auditor has not trusted the underlying assumptions on the FRVA tool. So I guess you could say, Abby, yes, money is important, but equally as important is that the business plan, your forecast, and the FRVA tool are all accurately reflect the new RTO setup.
Does that mean that it doesn't necessarily mean the more money you have, the better your chances are of getting through the financial viability risk assessment?
Well, in a sense, of course, more money means more working capital, which means more chance of the RTO's success. But it's not certainly not the only consideration. ASCA wants to see that the numbers presented can be trusted.
Like, what's the least capital that you can start with?
This is the question that comes up to me every single time a client rings wanting to start an RTO. The answer that you don't want me to say is how long is a piece of string, but truthfully that is the correct answer. You're not going to be satisfied with that though, and neither will any of the people that are asking that question today. Okay, but fundamentally it depends on what your beginning expenses are. Let's use yours as an example, okay, case study, because we're not going to be able to cover everyone. Your RTO setup, from what I understand, is a relatively low setup. If I understand it correctly, you're working from home.
Yes, that's correct.
Yeah. So you've got no need to charge the RTO rent, right?
Yes, that's correct.
Okay. Potentially, you may or may not charge your own salary out to the RTO. You might work for free for your business for a period of months if you have another income. Okay, now if you think about that, Abby, that substantially reduces the upfront expenses of your RTO setup. Right? There's $0 for the salary potentially if you had an income from another source, and you don't have any upfront rent expenses. So the capital you require is going to be a lot less than someone who's doing a more elaborate setup, someone that might need a permanent training room, need a training room to deliver substantial amounts of training face-to-face, or someone that might need to acquire all of their staff externally and pay full salaries for all their new trainers.
The next question is, do I need an accountant?
Yes, fundamentally you do need an accountant. I mean, the basic premise of the FRVA tool is that it does need to be signed off by a certified practicing accountant. Do you need an accountant to populate the FRVA tool and to generate the forecast? Well, you should, if you're not familiar with accounting practices and you don't understand things like balance sheets and profit and loss statements. But fundamentally, you don't need one, no. We've been successfully creating forecasts, profit and losses, and all of the, inputs required for the FRVA for RTOs for about 3 years, very successfully. Ultimately, however, they'll be signed off by an accountant, of course.
Does the money need to be in the bank?
Do you need to be able to demonstrate the money on the account? I get asked this all the time as well, and the answer is yes, you need money in your bank. If you're going to demonstrate to ASCA that you can financially support whatever model of RTO it is, you need to be able to demonstrate that you do have the cash. So absolutely, you'll have to generate bank statements and produce bank reconciliations to prove that what you have on your financial viability assessment and your forecast, it can be supported with real finances.
Can I use my salary to demonstrate financial viability?
Abigail, let's put it this way. ASCA want to see that the business is likely to survive under varying circumstances. And if your financial viability is contingent on someone keeping their job, I probably wouldn't recommend it as an approach. Besides that, of course, we need to demonstrate sufficient capital, both startup capital and working capital, to operate the RTO.
If I'm doing everything myself, I'm the trainer, admin, general manager, how much do I need to have in my bank?
It all comes down back again to the RTO setup. You need enough money to support the RTO in an ongoing capacity to pay any relevant wages, which in this case may be $0 if you've got an income from other means or sufficient money backing you, and obviously to support the venue, delivery cost and so forth in the event you may not even reach the forecast in your financial viability risk assessment. Now, advice is always be conservative and make sure that even in the event you don't reach conservative enrollment estimates, your RTO can still support itself for a period of time.
What costs would be expected from ASQA for registration?
The ASQA fees are published. It's $8,000 for assessment of the application, I believe $500 as an application fee.
What costs would be expected for materials and validation?
I'm really glad you asked me that, Abby, because that's one of the fundamental reasons there's no particular value that you can put of required capital in RTO. Some learning resources could cost you $20,000 and be many units in a niche qualification. Other qualifications might only cost you $5,000 and might be very good quality in a more generic course, such as, say, leadership and management. So you can see, Abby, how much you need for learning resources is going to differ widely depending on the qualification, how niche it is, and its availability. In terms of validation, you should always validate your learning and assessment tools. How much should you assign is going to depend on, I guess, the consultancy company that you elect to do this service for you. See, we offer a validation service. I'm not going to go over our cost here. Maybe seek independent advice from, most importantly, a validation consultant that you trust, so that your learning resources aren't compromised. You don't want to cut costs and compromise your learning resources.
What are the main expenses for starting and running an RTO?
The main expenses for starting and running an RTO will vary. By far, though, an RTO is delivered by human beings. It's training and assessing. So the fundamental, I guess, expense that every RTO will have is human resources, and particularly trainers for delivering qualifications. Of course, as soon as the RTO gets more complex or a permanent premises, they may need more administration staff, compliance staff, depending on the scope and size of the operation. Of course, the other main expenses are all your standards. The lease, if one is required, if it's face-to-face training, or training room daily hire rate, if that's going to be it's going to be a more temporary situation. In terms of startup, the most expensive fees, of course, are your ASQA fees, consultancy fees if you are going to get someone to help you do it properly, the cost of the learning resource. Certainly validation is an upfront cost that you wouldn't want to shortcut if you're uncertain as to the quality of the learning resources. And if you are going to take a permanent premises, perhaps a Cricos RTO, potentially there's going to be leasing bonds and upfront fees.
So that's it for the questions, but I was wondering if you can also talk to us about the most common non-compliances or reasons for financial viability risk assessments being rejected?
Sure. Obviously, a major one would be capital potentially not being able to support the RTO, but we don't really have that problem, Abigail, because we make sure clients we take on are aware that they actually have to have money to be able to properly start an RTO, whether it be a small amount because they're doing it from home or a larger amount because they're setting up a more substantial operation. But getting back to your question, the actual main kind of rejections or non-compliances we've actually seen, interestingly, don't relate to the FRVA tool itself. In theory, you can have all your numbers adding up really well. The balance sheet's looking good, the profit and loss is looking really, really healthy. The numbers all add up and it makes sense. So everything's entered correctly and everything balances. But ASQA aren't just looking at the numbers. They're looking at what underpins those numbers, Abby, and that's really where we're seeing most of our applications with sufficient capital fall down. But people haven't properly considered and modelled the expenses that they're presenting on the FRVA. It's not just the numbers, Abby, that need to add up. ASQA reports that we've seen are actually assessing the validity of the expenses and the income that are on that's on the FRVA tool.
What type of expenses have you seen ASQA question in the reports that you've seen?
Yeah, great. So the most common one by far is staffing numbers. You may have, let's take a concrete example to explain this. You may have forecast one trainer on $70,000 per annum as a simple example to accommodate the number of enrollments and students you have. One of the common things we've seen is if ASQA doesn't believe that one trainer can sufficiently deliver your projected enrollments, then despite the fact the numbers all added up on the FRVA tool, they're going to question whether the actual expense you factored in, i.e. one trainer as opposed to more trainers, is actually going to be sufficient to cover your projected enrollment numbers. Moral of the story, make sure that you understand your training and delivery strategy and how many hours each student will require training for, and that your training salaries and projected numbers really will fulfill those projected enrollment numbers.
How about income? What type of income, like statements or projections, have you seen ASQA question?
Yes, at the end of the day, an income's a huge part of your FRVA. It's going to tell you whether the RTO can survive. So ASQA wants to see that your income projected is realistic. Well, where does your income come from? Your income comes from a number of projected enrollments. Where do your enrollments come from? They come from the projections based on your business plan and market strategy. Okay, so what we've seen in audit reports from people who have gone about this perhaps not to the level of detail they need to, is that their enrollment projections have been baseless. So the auditor may have written, the market research outlined on the business plan does not really support or substantiate the projected enrollments. And that's where you could fall over if the auditor decides to scrutinize that. Okay, obviously they want to know the income does have a basis. If it's going to be considered as part of your financial viability.
Do you have any other advice to make sure that our financial viability risk assessment has the best chance of getting through the ASQA audit?
Yeah, absolutely. Like, your income should be realistic, Abby, and it should be based on either market research or even a known market that you're already tapping into, and you should be able to elaborate and provide evidence of that. Your expenses we've discussed need to accurately reflect you can deliver the training provided. That includes all equipment, resources, staffing, any room requirements. And what's really important is that in your financial viability, what is reflected there accurately represents what was actually formed when you did your training and assessment strategy and your delivery arrangements, and formed your entire kind of training strategy for the organization. ASQA are asking for congruence between your business plan and what you say you're going to do. They want to see that reflected in the financial forecast, and they want to also see the FRVA tool accurately represent that. Those three things should really align closely if you're wanting to ensure that the integrity of your case isn't breached.
Thank you very much for answering all of our questions. Just before I let you go, do you have any advice for people like me who want to start their own RTO?
Sure, Abby. Firstly, pursue your dreams. An RTO is a great business, and it's such a vast and expansive space to grow into. But as with any business, I've been in business 20 years now, you should put proper planning and market research into how you're going to execute it. You know, we've talked a lot about the numbers and what ASQA's looking for. You really do need to have a substantiated business plan and business case. Make sure there are going to be enrollments into your target courses in the areas that you're delivering them in, the means with which you're going to deliver them in. Make sure that you do have a marketing strategy that's going to tap into that market demand, because at the end of the day, it doesn't matter what you want to deliver. If you can't get it out to market, your business isn't going to be set up for success. So do your research and make sure that your model is going to work as best you can.